I was hearing all these people, Bitcoin's going to $1 million. It's going to replace the dollar. And I'm like, just fucking stop. Because to me, what that meant was if you want to get idiots to keep crossing you out at higher and higher prices, when it hits 15,000, you can't say it's going to 25,000. That's not enough. The only way someone's going to keep buying if you create these wild expectations. So unsophisticated investors will keep buying it even when it's 50,000. So there's this idea that the story circulating was so prominent back then is Bitcoin's going to $1 million. It's going to replace the dollar in 3 years. And I knew that was nonsense.
You know what it's like to see something and pump and dump something. So you know what it's like when you see something like Bitcoin where people are just trying to say it's going to $1 million, it's going to this. So you can see the flaws in that logic. You can also see how government typically regulates things in the financial markets. And that's probably why you had that first impression.
When things like Bitcoin or junk bonds or default swaps, things that were once not regulated, become regulated, almost always it's a massive boon for that sector. Because what happens is once regulation comes in, the bigger money can now safely invest. There is so much institutional money that's on the sidelines right now simply because there's no regulatory clarity. I think that where I am right now in terms of crypto and Bitcoin is a result of just a tacit belief that this is going to be a massive future. It's literally going to be disruptive to everything, the way we live, the way we spend money, the way we travel. And I think we're only seeing the tip of blockchain technology right now.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Jordan Belfort, aka the Wolf of Wall Street, the former trader, author, business advisor, and now crypto investor, DeFi enthusiast, and NFT creator. Your best-selling autobiography, The Wolf of Wall Street, became a hugely successful Hollywood film starring Leonardo DiCaprio as you, directed by Martin Scorsese and grossing over $400 million at the box office. The movie chronicles your meteoric rise to prominence as a Wall Street stockbroker who at one point employed 1,000 people, overseeing investments of more than $1 billion, but ending with you pleading guilty to securities fraud and spending time in prison. Since your release, you have reinvented yourself as a motivational speaker, business coach, podcaster, and entrepreneur. Most recently, you become an investor in the crypto space and the metaverse while also releasing your own NFTs. You passionately believe cryptocurrency will benefit from large-scale regulation that will help the industry grow bigger and better. Jordan, welcome back to London.
Thank you. Honored to be here. I always enjoy it.
I love having you here. You were here in studio 3 years ago in 2019. You had me as a guest on the Wolf's Den in April 2020, right after YouTube had banned us and we were fighting for freedom of speech. But you know, Jordan, I checked back on the episodes and in neither case did we talk about crypto, which is weird because for the past year, that's all that you and I have been talking about. We went heavy into the crypto and DeFi space. I've had probably 50 or 70 guests. I created a Crypto and DeFi Academy, graduated about 1,000 students in 50 countries. And I'm curious, why has the Wolf of Wall Street gone all in on crypto, DeFi, and NFTs?
So originally, if you go back to the public statements I made on programs like CNN, CNBC, I was always, even in my most pessimistic times of crypto, I was always very much a believer in blockchain technology. What I was not high on was Bitcoin at 20,000 in 2017. I knew it was ripe for a massive fall, and I was exactly right. The thing crashed and burned, but where I was wrong was typically when something like that crashes and burns, it drops to zero. In this case, it crashed and burned, but still had a $3 billion market cap. And that made me pause and wonder, like, wait a second, I know the market so well. I know how these sorts of speculative assets trade. When they bust, they don't bust out at the 3 billion. They bust out to zero. So there had to be something there. And that was really kind of the first thing that really made me take a much closer look. Now, my thesis for why I hated Bitcoin so much had nothing to do with Bitcoin. In fact, it was because I thought it was so powerful. I'm like, there's no way the government's going to let this shit go. There's just no way. Like, to me, it was inconceivable that the United States, and by the way, I think if they could turn back the clock 8 years, they would turn it back in a second and squash this shit before it ever took hold. Right. Because now it's basically too late. But in the early days, I thought the U.S. would do what China did. But obviously a government like China, authoritarian government, can just shut things off because, Xi says it's done, it's done. It's not like that here. And I realized somewhere around in sort of mid-2019, a couple of things happened. Firstly, someone gave me a very different perspective and a different pitch on Bitcoin. I was hearing all these people, Bitcoin's going to 1 million. It's going to replace the dollar. And I'm like, just fucking stop. Because to me, what that meant was if you want to get idiots to keep crossing you out at higher and higher prices, when it hits 15,000, you can't say it's going to 25,000. That's not enough. The only way someone's going to keep buying it if you create these wild expectations. So unsophisticated investors will keep buying it even when it's 50,000. So there's this idea that the story circulating was so prominent back then is Bitcoin's going to 1 million. It's going to replace the dollar in 3 years. And I knew that was nonsense. But then what I wasn't hearing, and there was actually even more of it, I wasn't exposed to it, because those people yell really loud. But the people that actually understood Bitcoin were like, stop it. It's never going to, it's not meant to replace the dollar, not anytime soon. But what this is digital gold. It's a store of value. And I got a very sober perspective from someone on Bitcoin, a guy named Robert Beatles, who you might know, a podcast Beatles, right? And we became partners in an app out there. And once I started looking at it from that perspective and doing more research, and I saw people like Elon Musk. Now, it's not because like when people say, oh, Elon bought it, I'm not interested in that part, the hype part. I'm saying it was a bunch of people like that. I saw institutions actually started getting behind it. And I noticed that as the inroads into the mainstream financial system became more and more developed, I was like, there's going to be too much intersection for the government to say, done. I started realizing that it's not going to happen. I said, what's going to happen is they're going to heavily regulate Bitcoin versus trying to shut it down. Now, purists will say you could never shut it down, but I don't believe that's true. There was a time when I think they could have made it so undesirable and almost made it illegal. They could have really destroyed it and made it something that was in the fringes and, using for purposes it probably shouldn't be used for. Once it crossed to that point, I noticed the inroads into mainstream financial institutions. I said, it's going to get regulated. And one thing I do know, and I've been around many years, as you know, I'm older than I look, when things like Bitcoin or junk bonds or default swaps, things that were once not regulated, become regulated, almost always it's a massive boon for that sector. Because what happens is once regulation comes in, the bigger money can now safely invest. There is so much institutional money that's on the sidelines right now simply because there's no regulatory clarity. Yeah. Once regulatory clarity really comes in, I think it's going to be amazing. And it will also knock out the shitty motherfuckers who are destroying DeFi and the image of it by releasing these shit coins and doing things that they should not be doing, that they should go to jail for. And even that's come from me who went to jail for something like that by in my younger days, but I'm a little older and wiser now, okay? But it's giving the industry such a bad name from that stuff. That stuff's got to stop. Yeah. So that's where I stand right now.
No, there's like 5 points there, and I'd love to get into each one because each one, it shows the unique lens, Jordan, that you can bring to this industry because, first of all, you know what it's like to see something and pump and dump something. So you know what it's like when you see something like Bitcoin where people are just trying to say, it's going to 1 million, it's going to this. So you can see the flaws in that logic. You can also see how government typically regulates things in the financial markets. And that's probably why you had that first impression. And then again, most people would not expect you to say, guys, regulation is what we need. But then again, you've seen it from the inside of Wall Street to see how it actually made things, like you said, junk bonds become, things that normal corporations would use and pension funds would use. And then finally, I think it's a great thing you talk about the industry because you're watching people basically commit fraud in the open, transparently in front of everyone, and they're not getting anything from it. And that, I could tell, that irritates you, right? Because you said...
Oh, it does. It does, yeah. It does. I don't want to cut you off, but you're like hitting me. I'm like, I start to twitch, the fraud, because I'll tell you why.
Let's talk about the fraud right now, because I know it bothers you.
Sure.
First of all, why does it bother you? And tell me, what does it do to the industry? Why does it bother you so much?
As a person that committed securities fraud, right? One thing we did not do was we didn't target young kids with no money and take their last dollars. I'm not saying what I did was right, but we called rich people and someone who was worth a few $1 million or 10, whatever it was, and they lost a few $100,000 and they could recover. It wasn't their last dollar. And that's a fact. And in fact, anyone wants to dispute that, go to my podcast. I had my FBI agent who arrested me. He said the exact thing. No, it's true what you did. So that was one thing. And I felt good about that in a weird way, because even though I was, breaking the law, I was like, well, there's certainly degrees of badness. And it was bad. I don't want to minimize what I did, but it wasn't as bad as taking, lady for a last dollar. Different game, okay? Or stripping a young kid or a poor person in some third world country of their last dollars because they think it's, a legitimate coin when it's actually simply been launched and designed to separate people from their money. That's evil, stone cold fucking evil. And just for the record, I never launched a stock that was I never created something to go to zero that was designed to separate people from their money. And you're a very sophisticated guy. You're from Wall Street. Why would Wall Street? Why would I ever take a company public that I thought sucked?
Right.
I make 1,000 times more by a company that works. So I made more on Steve Madden than all the other ones combined because that one worked the best. You don't make money by taking a shit company public. The problem is it's hard to find great companies. And also you're dealing with entrepreneurs who go down, the wrong path. But what I was doing was manipulating stocks is more esoteric. So that's one thing. Second thing, I wasn't poisoning the image of an industry. The stock market is a well-established industry, and people knew what they were getting into with penny stocks. In fact, we would send them a letter. If you wanted to open up an account at Stratton, you would receive a letter. This is a piece of shit you're investing in. It's going to zero almost certainly. I'm manipulating the stock. So when you buy it, you're probably buying it at a price way higher than the fundamental value. And when you try to sell it, there's probably no buyers. I would send that letter to every person. No one cared because they knew what they were getting into.
Right.
Here, this is very different. You're dealing with people with no disclosure, and it's just happening at such a level of fraud with this, they call them rug pulls, which is just pump and dump, right?
Yeah.
And these people need to go to jail. And listen, and I still went to jail for it. I deserve to go to jail, and I'm not even. I'm happy in retrospect because I created the greatest life ever for me, right? But the point is I made a mistake. I deserve to go to jail. Forced me to start over. And now I do things right. And it's a great lesson learned. It's an inspiration and a roadmap for other people. But it bothers the fucking hell out of me that these people, they talk about it openly on Telegram. I'm like, are you guys understand what you're doing? You're talking about committing fraud, and there's a paper trail forever on this stuff. You guys are going to, at some point, go down. You know as well as I do, there are many very, very large influencers that use their name to pump up shitcoin after shitcoin after shitcoin, knowingly doing it. They still haven't gotten in trouble yet. I don't wish anybody well, but anybody bad. But that really bothered me too. I got offered, I'm sure like you did, I got offered to pump up every shitcoin in the world. I never did even one. I never talked about one coin ever. The first time I briefly mentioned the coin was the other day, a coin called Protocol, because I invested in the company myself, but I won't sell a thing for 2 years if I invested in it. So it's and I barely even didn't pump it. I just mentioned it on my podcast. Oh, by the way, I own it too. So, but what went on. It was ugly and disgusting. MILF coin, Schmilf coin, Litecoin, Brightcoin. Come on,
Yeah, exactly. And we see these things launched with similar names to other coins. And yeah, the thing people don't realize, especially these kids don't realize, is that on top of everything, Jordan, it's on the damn blockchain, right? So they're not only, there's literally a trace, on the block of all these things that are going to happen. And you believe firmly that it's just a matter of time before all these people will be found and prosecuted, right?
Brian, I committed securities fraud in 1991, 2, 3, and 4. I did not get arrested until 5 years later. And at the time, I was already out of the market in a completely unrelated industry, running Steve Madden shoes. And I was out of it, doing everything right. The wheels of justice grind slowly, but they do grind forward. And I got to tell you, I think that it needs to happen It needs to happen. A lesson needs to be taught. I don't think this should go up to everyone, but the people that really did this in a big way, not once, but again and again and again, deserve to feel the pain as an example to everyone else. And I truly believe that.
Yeah, and I appreciate you saying that. And a lot of people in this space, and you know them, Jordan, is when they hear the word regulation, they get angry because they say, you're trying to stop our party and we have this whole new system and it's going to crash the financial system the way it is and we're going to set up a brand new system. But that's actually not true or realistic. What you really need is that regulation, because all the institutional money, the money that we know from the pension funds, insurance companies, the banks, when that comes in, it'll eclipse this whole market. You know, it'll take a $2 trillion market to a $200 trillion market potentially.
There's some amazing things that Bitcoin et al. Blockchain has done. Things it's like, laid down the railroad tracks for. But on the other side of the equation, one of the main reasons that people love it so much is because it's taken away all the regulatory hurdles for raising money. In other words, you can raise money for this stuff without spending any money. And it happens in a matter of days if you want. You could raise money almost instantly in a matter of, you get a Telegram group, you do this, and you're in, versus having to go through a real actual disclosure and a filing. So my concern is that I hope that regulation allows some happy medium there. And I believe that it will. In other words, it's going to require, what needs to happen here is it needs to be disclosure. The days of living in the shadows behind pseudonyms, I believe, is toxic and ridiculous. It has to end. I understand why in the early days it had to happen, because it was all unregulated. They would just go and arrest you. So you had to have these pseudonyms. But people then abuse that to start doing all these rug pulls, and there's no one even to go after unless the government gets in there and starts to investigate and peels back the curtain. That takes a lot of resources. But I mean, bottom line is, I believe this industry needs disclosure. And once that disclosure is in there, the power of the blockchain and of good deals will shine through, and the shit deals will really quickly fade away.
Yeah, it's a fine line. I had a guy on my show named Vinay Gupta about 8 years ago, and I talked to him recently. He was one of the co-founders of Ethereum, and when they were about to launch the coin, he said, wait a second, I see this all going wrong. I look at the legality, and he kind of withdrew from it, and he walked away from $160 million. But he saw that some people were going to go to jail, and we saw that happen. There are people in jail now that have been, persecuted, prosecuted, and then you went to the founder with no...
Mostly the wrong ones.
Yeah, I know.
Mostly the wrong ones.
I know, mostly the wrong ones, and that's why you see a lot of people in the Bahamas right now and in different other locations around the world, because they fear that they'll be made the poster child of regulation. But a couple of things. I get pitch decks all the time where there's no last names on the founders, and I'm like, come on, guys. Like, are you kidding me? But I see why they went there, but that has to change, because this
That's
market...
what regulation should change, because I think one of the issues is, and this is a legitimate complaint that these people have, the legitimate people that are remaining anonymous. So they're remaining anonymous because they're nervous about regulation. They're doing the right thing. They're trying to do the right thing, but they feel they'll be persecuted because there's a lack of clarity right now. I respect those people, and those people need to be anonymous. The problem is, for every one of those, there's 10 people who are using the anonymity to create shit coins and just separate people from their money. That's the problem. So when you eliminate that hurdle by having clear regulations, there will no longer be a reason to hide behind the shadows. You can still do your general hiding behind some corporations, but ultimately, you're going to have some disclosure. Someone's got to be able to take the fall, and you need that even if it's a decentralized organization, there's got to be someone that has to be accountable.
Now, let's go deeper on regulation, because you were always gobsmacked that this market never got regulated, because you felt the sharp end of the stick at regulation. You grew up on Wall Street. I took my Series 7 and my Series 63 exam in 1993, and I got schooled in all the rules and the laws, and you and I both grew up in an environment that was a hangover from, the stock market crash and the depression, where everything was under the microscope. And so when you first saw Bitcoin, I guess you're thinking, there's no way a financial instrument goes unregulated. Now it has gone unregulated. What was your whole view of that? And are you still surprised that the government didn't jump in?
One thing to my fault, a mistake I made, I should have looked at Bitcoin more closely. That was a mistake I made. And my knee-jerk reaction was so negative. It was so like, there's no way it's a scam. And remember, also it was first linked to Silk Road,
Yeah.
so it wasn't like, and that's how a lot of things start. Like the internet when it first started was
it's a use
lot of
case
internet
that
porn.
it kept it alive,
right?
The Silk Road kept it alive,
right?
Right,
Of course. And so, but there was this other side of it. There's been many times in the past when people have tried to launch their own currency in the United States, and they all end up in jail. All of them. A guy has this, it's many a world coin. There's many instances in the past. The brilliance of what this coder, whoever he is, what he did, and his remaining anonymous and turning it into this sort of idea bigger than himself was fucking brilliant. But what I felt, my knee jerk was so strong, and I'm like, there's no way it's going to have to get shut down, is that I never bothered to look at the actual fundamentals behind Bitcoin. The scarcity, the way the difficulty adjustments, the way the actual economics of Bitcoin really create over the long term a very stable reserve currency, which is, I think, ultimately what it's going to be, is some sort of global or universal, even when Harry Mudd from Star Trek is one bit of this. So in other words, I really can see over time how this can become a truly universal asset that can be used as a reserve for other things. It solves so many problems that currently exist right now in the central banking system, and as a result of people still being drunk on Keynesian economics and that sort of monetary policy that comes with expanding and contracting the money supply. When in fact, I think a lot of that is just simply, it's almost like it's the effect going before the cause. You know what I'm saying? It's like the solution's creating the problem in many cases. Now, I think at the end of the day, it's going to lie somewhere in the middle. I don't think nation states are going to ever give up their sovereign ability to increase and decrease the money supply. I think it's going to be a long time before that happens. It'll probably take some sort of reset of the entire world financial system. But I didn't look deeply enough at Bitcoin to say, what exactly is it?
Right.
And once and I'll admit that.
Yeah, and you had come from a world where you probably looked very suspiciously on anything that felt pump and dumpy. So you probably initially were like, this thing smells wrong. It walks like a duck. It floats like a duck. It quacks like a duck. It's got to be a duck. And that's why you originally
were negative. It was a duck. Yeah, exactly. It was being used like a duck. So what happened was there was a time when it was being used by people illegitimately. In like the run up from 2014 to 2017 was a complete bump and dump. It was. And it went all the way back down to 2000 because it was like the first real retail use, where the retail adoption was a lot of scamming going on, a lot of pumping up, a lot of wash trades. Tether I believe, was being printed at times it shouldn't have been printed. There was a lot of things going on that really were illegitimate. And I hated the narrative behind Bitcoin in the years of 2014 to 2017. I thought it was toxic. It was misleading. And I think there was massive fraud and manipulation. But the underlying code, the premise of what Bitcoin is and was, is so powerful that it eventually washed all that out as legitimate players started to really see this. And I give people like Michael Saylor a lot of credit, who literally early adopted like that, to really put his money where his mouth is, to see it for what it really was. And I respect that.
Yeah, I had Max Kaiser on my show, Jordan, in 2013, screaming about Bitcoin. I bought some then. We were talking about the liquidity issues and all of that. And then I had Andreas Antonopoulos on my show in 2015 and 17 and 19 talking about the future of money and the internet of money. He wasn't using the word DeFi yet because no one used it yet. And then we jumped into this space about a year ago. I had Michael Saylor on, and when he called Bitcoin digital property, it clicked for me, Jordan. I don't know what it was. Sometimes someone will say something and you're like, oh, that's what it is. And once I started seeing for what it is, I had Dan Tapiero here who said, Brian, it's like the steam engine. It's a piece of technology that humans have created, like the wheel that takes us forward. And even though we can't see it, this way of cryptographically taking an asset that we can exchange between each other across borders, it really is beautiful tech once you allowed it to be seen, right? Once you're like, oh, wow, this is really great. So I give you a bit of a pass for not seeing that right away, because a lot of people didn't either, right?
No, listen, Warren Buffett, and Jamie Dimon, always very, very smart. I'd say almost the more you knew about finance, the harder it was to see the value in it. Yeah. Seriously, there was an inverse relationship. And especially, as you said, I think you pointed out something very important in my purview, is that someone who was involved in pump and dumps and knew it so intimately, it was like, it was like, whoa. It was like, to me, it was like that colored it so strongly, and it was happening, and it did cause a massive crash in the asset in 2017 as that bullshit got washed out of the system and it formed a new base. That's when I started saying, wait a second, this next ride is very different than the last one. It was a lot more people talking about digital gold or digital property. It was more institutional in nature starting to come into it. Everything was beginning to change. And that's when I started to look at it more closely.
All right, let's finish up on Bitcoin because I want to get into DeFi and also NFTs. But the state of Bitcoin now, obviously we came off the highs of like 67,000, which was October. It was my 10-year anniversary show finally when it hit the highs. We're back down to correction levels at 40,000. I think most of the market is now expecting some type of sideways movement over the next couple quarters. I know you've come out and said, I can't stand people that call Bitcoin to go to $250,000, Bitcoin to go to $1 million, because you said something, and Jordan, I quoted you to my academy on Monday. I said, look, nobody knows the price of the asset in the future. They might try to convince you they know. They might have a crystal ball, and they might have a cape, or they might be an economist, or be at JP Morgan, but nobody knows the assets price of anything in the future. We know that from being on Wall Street. But this space is so new that not everyone knows that. How do you see Bitcoin? How do you talk to people about Bitcoin? And what do you see as the future of Bitcoin?
I think Bitcoin's going higher. And I think I said I thought it'd be at 100,000 by the end of last year. I said, but it could also be 10,000.
Yeah.
I don't know. I think it's going to 100 grand. That's why I'm long. But I think it just as easily be at 20,000 or 10,000. But I certainly think over the next 3 to 5 years it goes substantially higher. Why? I think if you look strictly at the adoption curve of people around the world, and especially institutional adoption post-regulation, I think it's pretty easy to make a case that when you take that increased demand that comes from institutional adoption, and then there's another side to assets going up and down, stocks, bonds, whatever they might be, that most people don't focus in on, and that is the withholding of supply. There's two sides to any stock manipulation or just the stock going up and down. That is creating demand, but also restricting supply. Bitcoin naturally restricts supply, and many people that buy it hold it for the long term. It's sticky. So while there's this trading all around that creates volume every single day, the vast majority of Bitcoin, when people buy it, they hold it. So I think when you combine those two things together with adoption, with the stickiness and the investment nature of Bitcoin, I believe it creates a scenario where it should go substantially higher. In addition, there's something that happens with Bitcoin every X number of years called halving, where the rewards that miners get for maintaining the system and verifying transactions and solving the problem, doing the work that actually validates a transaction. It's very separate from verification. First they validate, then others verify it, right? Once that reward, I think maybe it's like 5 or 6 coins they get right now, it's going to get cut in half again. If you look back historically at these what they call halvings, they serve as inflationary events for Bitcoin. So I think that in 2024 or 5, when the next halving occurs, I think that's going to also put upward pressure on Bitcoin. But so much can happen between now and then. Like it still could go, I don't know, to zero, but it could still really go to almost worthless, and it could just fall out of vogue for whatever reason. It's always possible. Now, do I think that's happening? No, that's why I'm heavily invested in the asset, okay? But I do think that the chances of it being much higher over the next 1 to 3 years is great, and 3 to 5 years even greater.
Yeah, Jordan, you just mentioned kind of the volatility inherent in these markets. Have you ever seen an asset so volatile? And do you think humans on even a base level can process an asset being this volatile? I was telling my students the other night, I said, say you bought Bitcoin, you put $100,000 in it and it doubled the money to 200,000. And then it went back down to 100,000 to where you actually were still flat on the trade. I'm saying you couldn't actually emotionally handle that process because you would have been trying to spend it, borrowing the money. You would have thought your future would have back down to 100,000. You would have probably be depressed, anxious. Maybe speak on that as far as the volatility, and can most humans even handle that volatility?
I don't think there's anything unique about Bitcoin in its volatility at all. Look at oil. Oil was negative $30 a barrel a couple of years ago. Then it goes to 150 and goes back down. Okay. Commodities and assets can be very volatile. Okay. The difference, and I'll tell you the big difference of this whole thing is that when you view it as money, you're pegging it against things like the dollar or the currencies where it's supposed to be stable. But I don't think Bitcoin, it doesn't act like money right now. It acts like a growth stock. And it trades like a growth stock. And until it gets more mature, and it's probably another couple of years when it's going to start to mellow out more, but I think it's going to increasingly become more and more stable over time. In addition, what you have now, which you never had at any point before this, is complete visibility to every single bit of volatility. 25, 30 years ago, we would have stocks that were incredibly volatile, but if you wanted to find out about it, you had to wait till the next day and read about it in the Wall Street Journal. You couldn't track it every second. People could track things every second of every day. Is Bitcoin more volatile than GameStop was? No way. GameStop was far more volatile. It went from like a dollar or two to 500 or 3 or 4 back to. So anything that's being speculated on like that is going to be inherently volatile. It's when you start thinking of it as currency, and compared to the dollar, it's very volatile, but compared to other wildly speculative assets, it's probably right in line with what it should be.
Yeah, you mentioned that transparency of information. When I was on Wall Street and when you were, at Stratton, the information asymmetry, as Gary Gensler would say, is the reason we made money. Because on Wall Street, exactly. I was doing derivative trades. I would never ever mention a trade to anybody. So we kept all this information to ourselves. We knew the real price of an asset. The same with you with the penny stocks. And then when the customer would call, you would give them the price of the asset. And it was all right.
Exactly.
And this
is inside bid versus the real bid.
Yeah. This is how Wall Street has made their money for 100 years. It's been that asymmetry of information. Now with the blockchain, like you said, every trade is posted. It's this strange new world. Now, it doesn't mean markets can't be messed with. It doesn't mean that exchanges can't find ways to make money, but that makes it fundamentally different from what Wall Street does.
Well, just remember, so like what you just said is exchanges. So when you have, listen, what's happening right now in this first evolution of blockchain is you're having centralized institutions like Coinbase and whatnot. Those are not, that's not crypto. I mean, that's actually the furthest thing. This all internal transactions they're doing, and they're trading it like they do NASDAQ stocks over illiquid NASDAQ stocks like I did. And they're making mass amounts of money by completely, marking things up, holding things in inventory. I mean, it's just ridiculous the amount of money that's being made because of the lack of transparency. But when you talk about the actual blockchain, DeFi, things like a sushi swap, or when there's, then you have slippage in the middle, which creates money, but it's certainly like in Coinbase, it's like not even, I wouldn't consider that's not even blockchain.
Yeah. I try to explain that to my students. They're like, well, Brian, and we're going to talk about DeFi. When I go on Uniswap, because I get my students to use these trades, I got charged this gas fee, but there's no gas on Coinbase. And I just laugh out loud. And I'm like, do you know what these guys are doing over there? They're giving these big bid offer spreads. They're making mad money. It's probably crazier there than the trading floor of Stratton. They're making.
Oh yeah, for sure. Oh my God, we are choir boys compared to what's going on now.
You're right. And I had Alex Mashinsky of Celsius on here, and he was calling them out, saying, "Yeah, this isn't crypto. This is a stockbroker. Broken crypto is what it is. It's an old school institution that's using a new
nothing to do with crypto.
Yeah, do an instrument. Yeah. And I think people need to be aware of that. Right now, they've got a lot of liquidity. They're making a lot of money, but it isn't the blockchain. That is more where the DeFi space is. And let's talk about that, because you've called the blue chips, I think, Bitcoin and Ethereum, as in the two most stable of the cryptocurrencies. I think you have both. We have both here as well. Can I just get your thoughts on Ethereum, because it'll take us into DeFi. I was at a conference here in London, and Mike Novogratz from Galaxy Digital was there, and he said, look, Bitcoin is digital gold. He said Ethereum is more of a technology play. He said that's more of a tech play is what you're doing, or a financial technology play, and it trades more like a tech stock. How do you see Ethereum, and then how do you see these DeFi markets? Because it's pretty fascinating stuff.
So they're very different. Bitcoin and Ethereum, they're very, very different types of assets. I look at Ethereum as almost like the railroad track that's being laid around, the country right now, in the world. allowing the connections from one place to another and for things to be transported on those tracks, so to speak, right? Which is all the different tokens that you can, move along the different rails that Ethereum creates up between computers around the world. Very, very different. I think that there's some fundamental problems with Ethereum right now in terms of, how expensive it is, and it can be sluggish at times, and the entire, proof of work concept going to proof of stake. And I know that they plan on making that move at some point. And I think that when they do, it's going to be a massive boon for Ethereum. If it actually works and it allows for, gas fees to drop to negligible amounts, I think that you have this massive network effect with Ethereum, that people are building applications on Ethereum. So at a certain point, it just makes it like sort of the default network of choice that everyone else is building on. It's like how, the iPhone becomes so powerful because everyone has their apps they build on it in the App Store. So all the developers are now increasing the value of this iPhone. And what, the operating system that was created by Apple is made far more useful by all the apps, that the applications that people then create that integrate with an iPhone. The same thing's happening right now with Ethereum and Solana too. Solana was launched after, like trying to make it as an alternative that's cheaper and more effective. But in essence, Ethereum's got this massive lead right now. So everyone is out there, all these young, ingenious people trying to come up with the next great thing that's going to disrupt whatever it's going to disrupt. And they're using Ethereum as the railroad track in the same way they're using the iPhone with your app that you're building. So I think you could draw a straight line almost to what was happening when I'm going to develop the next great app. That was back in like the 2010 to 15 with iPhones, right? Everyone's an app developer. And now we're talking about DeFi applications with how do I use the Ethereum operating system, so to speak, to develop my application that's going to solve a problem and get rich like that in the crypto world.
Yeah, and it's a victim of its own success, because right now the biggest complaint I get from my DeFi Academy students is the gas fees. They're all complaining about the gas. And I say, look, just put the first trade on in small size so you can understand how the railroad tracks work. And guess what? We got solutions. We got layer 2s in Polygon. We got layer 1s like Solana and AVAX. And I've had Cardano and Tron and all these others. And I've had a bunch of those founders on the show. And it's coming. But it empowers this new decentralized finance world. And, Jordan, I think it was last year, May 8th, when I lost the race to be the next mayor of London, I took a look and I thought, what am I going to do next? And I looked at the DeFi summer of 2020. And Jordan, I saw what was going on and I thought, this reminds me of Bankers Trust in the 1990s, fixed income derivatives, except you don't need a balance sheet. You don't need 20,000 employees. You don't need a direct line to the Fed. You can be 15 guys in Tel Aviv and a dog, or 12 girls in Singapore with a cat, and you can put up Uniswap and boom, you can have the same volume as Coinbase. And I thought, this is real. The total value locked. I'm telling you, I was like, I'm in on this. So that's what we've been doing the last year. When you see DeFi, whereas like you said, these platforms where you can actually literally see your trades happening and there's not a middleman market maker like at Coinbase. When you see that, what do you see in DeFi and why are you so excited about it?
I think those are ingenious applications. And I think that, they're ingenious. It's definitely the future. Certainly for crypto. I believe in a lot more than centralized institutions, being in charge of all the buying and selling. It's almost like a DeFi, let's say a centralized institution in crypto is like shoving a square peg into a round hole. It just doesn't fit. It's like the exact opposite of everything that crypto was intended to be, which was decentralized, right? So take that for what it's worth. There still needs to be far more transparency, I believe, in all of these, major DeFi protocols, whether it's SushiSwap, PancakeSwap, like Uniswap, they're amazing. And I think they're going to be even better in the next 3 to 5 years. And I think that I just can't overestimate how important regulation is to this market, because I think the more this is regulated, it's going to create such fierce competition. Smartest people are going to come in and make this stuff cheaper and more elegant. And I think ultimately they're going to make it very, very difficult for the Coinbases of the world. It's going to be almost no more need. Why would you want to have a Coinbase? I don't really know. I mean, listen, I have an account there right now. I do. And I have a lot of money over at Coinbase because right now in today's world, it just makes it easier for certain things, right? But I don't think that's the future of this world. I think the future is in these DeFi applications. And I think they're brilliant. You brought up a great point. 12 people with a cat. I know that happened in Brooklyn with, I think it was SushiSwap. I think it was SushiSwap. That was one of the swaps was there. So Uniswap started there. I know people that were founders of it. And they just, literally, they killed it. They did it with 12 people. And they replaced what was a 20,000 person institution with clever coding. Yeah. And they're brilliant stuff.
Yeah, it's brilliant. And then you saw like Uniswap match the Coinbase volume. And then you saw like SushiSwap come in and they did this vampire attack where they airdropped all their tokens to the Uniswap customers and like stole their liquidity. I mean, it was crazy. And you're like, wow, this really is decentralized because, you could take someone's liquidity. Normally to take JP Morgan's liquidity would take you 20, 30, 40, 50 years because you couldn't actually steal it with tokens.
The SEC would shut you down before you did it because JP Morgan would call their henchmen at the SEC and say, nope, get those guys out of business. So it never happened.
Yeah. And so I guess that comes to my next question is that we know the banks, we know the banking industry, we know Wall Street. How will they or can they sit by and watch, DeFi come in and potentially remove people from having a bank as their middleman with every transaction in their life? I mean, most people don't realize that their banks control their lives, their brains, every moment of their day via some financial transaction. How does that transition happen, or does it?
I believe it does, not completely. I believe, let me take this in a few points here, right? Number one is just to answer your question directly. When we were growing up, you saw these technologies come out, these amazing new technologies, and there was typically a few different versions. Then it would get narrowed down to two. You had Betamax and you had VHS. Yeah. And then suddenly just one starts to take hold, the network effect starts. And next thing you know, it's impossible to have two types of technology because everyone's on VHS. So the people don't want to make their stuff, the content for beta. And even though beta was actually a better technology and clearer pictures, VHS won out. We saw the same thing happen with Laserdisc and Blu-ray. Blu-ray won the match. We saw it happen, and many times before that, where you have like you have multiple people in the game, and then one side wins. But then we see other cases where we have two winners, and I guess the best example that I think is going to mirror what's going to happen with DeFi and crypto and the mainstream financial institutions is Apple and Android. Apple represents centralized institutions. They control everything. It's a tight-knit community. It's closed. You have to go through this one place and no one could use it. Versus Android is basically open source technology somewhat, where people can sort of have all these different companies can use Android. Hence why there's far more volume in Android than there is in Apple's 30%, 20% of the market. Yeah. Android is 70 maybe, but it's made up of 1,000 different companies, while Apple is one company. So it's the best, and they have certain advantages by being a closed ecosystem and control and user experience that gives Apple a huge edge. And also Apple's an amazing brand. But you notice you have these two independent technologies that run side by side. And now in the early days, if you had an Apple computer, you couldn't run Microsoft programs. And ultimately, they created links to the two over time. And they started to talk to each other, and you can get off and on, and all the on-ramps and off-ramps between Google Play and Apple Store, and their, everything that happens with all those ecosystems, right? They start to talk to each other. I think that's what's going to happen with centralized financial institutions and DeFi. Ultimately, DeFi will be much larger than centralized institutions. But what you're going to have is on-ramps and off-ramps, like we're already seeing right now, where you go from the decentralized world into the centralized world. And I think based on how the governments ultimately shake this out with regulation, because there's all the KYC issues, there's sovereign monetary policy. So I think you can't hold back the technology of DeFi to make it smaller than central institutions. It's going to be DeFi is going to be much bigger. But I don't think you'll see the disappearance of centralized institutions in our lifetime. I think you're going to see DeFi taking off, and then centralized institutions being the gatekeepers back into the mainstream financial institutions, and they'll talk to each other until they're almost like.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.